Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Checking in on the MJ sector, WEED, OGI, APH ACB EMC MJNCBIS NDEV, and GRNH. So WEED bulls, very impressive end of the week. We had a little bit of a double top, 1227. Then we topped out at 1218, and then on Friday, 1225 was the high of the day for the majority of the day. But then towards the afternoon and towards the close, the bulls showed up again, and they saw some nice upside. So the reason that, in my opinion, the reason that we're seeing all this strength is, number one, the attention from the name change. That was the spark and the catalyst. And you could see it on Stocktwits when we were trending last Friday. At the top, everybody was saying, what's this ticker? What's this stock? Is it new? I've never heard of it. And that increased some new money coming in. And that's a catalyst effect because traders see the new money coming in, they see the breakout, and they put their money in. And it's really a self-fulfilling prophecy to some degree, where you have the increase in money from new money and then money that's already aware of it coming back in. And the breakout continues strong. And it's also, we're seeing this kind of move because of the lack of previous price resistances. So as soon as we got over 1117, the next clear major resistance is up at 1247. So that's why a little bit of volume is going a long way for moving this price, because there is a lack of price history resistance at these levels. And if we get above 1247, it's going to be the same thing. After 1247, I'm looking at 1325 as the next level. So I do expect some consolidation in the near term. We do have earnings coming up. And seeing that we're getting a run into earnings, it would be surprising for me if we were to see a bullish break in reaction to earnings. It would have to take a big surprise, in my opinion, for traders and investors to want to continue putting money in response to those earnings reports. So I would not be surprised to see a little bit of a sell the news event. It wouldn't be significant, in my opinion. Any consolidation that we see is likely to be normal and healthy here, because to maintain the higher low pattern, all we need to do is form a higher low compared to 972. That's pretty much a guarantee from this point, in my opinion. And we're looking at support 1192 and 1130 are two levels that I'd be watching if we do consolidate. But as I keep pointing out, as long as we stay above this upper Bollinger Band, we remain in full-on breakout mode, and the bulls remain in full control. The weekly time frame, nice bull volume. After sideways consolidation, big time bull break and continuation to the upside. This is a really good looking weekly chart for longer term bulls. OGI got hit with being that news where they took away its organic status, and we're trying to recover here. We had support of 266, and we bounced off of 263, and the bulls clearly bought that dip, closing strong, but we didn't see any follow through. And on Friday, we saw a tight range and an inside candlestick. So a break of 271 will be short-term bullish on Monday, and a break of 266, and we're going to be heading down. So personally, I would not be in this name. There's too much negative headwind, fundamentally speaking, with the company that wouldn't have me wanting to play this name when there's so many other names, licensed producers to choose from, specifically one that's currently in breakout mode in weed. But OGI just struggling to try and hold on here, and we can look back. Look at the high of December 14th. APH, ACB, and now WEED have all broken the high of December 14th. That's up at 350, and that is currently almost 30% away from where we currently stand before the bulls would even be anywhere near on par where those other names are, looking back at their history of where they were trading in November and December. The weekly time frame lost the middle Bollinger Band support. That's also a red flag. That middle Bollinger Band is 283. This is the first time that we are losing this level, and it looks like if we were to head down and break 251, we'd be looking at 238. That would be a very bearish break. So 251 is a must-hold level for OGI, in my opinion. AGH is also, or I should say APH is also very tight, and we've got a very small trading range to end last week, but the bulls are progressing with small increments of higher lows and higher highs, which is exactly what they want to see to maintain some strength. So I've got resistance at 560 and 565 back from mid-January, and we hit 555 and 554, the highs of this week. So we did get a close right on 550. The bulls have been struggling to close over that level. We've closed at 546, 550, and unable to close above 550 at this point. If we do, we're going to see a bullish MACD cross. You can see these Bollinger Bands are tight, but they're going to begin ascending, creating more room to the upside. And if the bulls can head up, a key resistance to break this little lower high pattern, since we hit the high of this strong bounce back in mid-January, we're looking at that 565 level and then up to 573. So bulls are holding on, not seeing a ton of strength, but we did close at the high of the week the past 2 weeks, and that's that 550 level that the bulls need to close over to see progress continue to the upside. Middle Bollinger Band support still holding, that's still catching up, and a break of 565 and 573 is an ideal scenario for the bulls to be looking as strong as WEED currently is on its weekly chart. ACB, no surprise, we're seeing some profit taking. We had a 3-gap up bearish reversal pattern, and that just shows the bulls are exhausting themselves to the upside. It was obviously a very strong move where we went from 228 up to 262, a 34-cent move, over 10% in 4 days, and a 3-gap up bearish reversal pattern with some confirmation with that profit-taking day on Friday. So the high of the day was the open. We broke the low of Thursday, filling the first gap to the downside at 253. And the question is going to be, how much consolidation do we see from here? And as long as it's on decreasing bearish volume, the bulls remain in control. And we have all these moving average supports to hold as well. 246 is the middle Bollinger Band. We'll see if we test that level on Monday. But the weekly time frame shows the bulls in control. Nice strong week. And we're keeping these higher low patterns going. And the bulls need to see a break of 572 to see a nice strong move and continuation. If we get above 572, the next resistance is up at, or I should say 272. If we break 272, we're looking up at 278 and 285. But overall, I do like ACB and the recovery that the bulls made in reaction to that dilution news. And we did make a full recovery where we filled that gap from the downside. And we had APH with bearish reaction to its dilution news, and it has recovered as well. So what this is showing us is that dilution news does get short-term bearish reactions, but so far they've been buying of the dip opportunities because they have recovered nicely in response. Just takes a little bit of time. EMC. So we got a perfect bounce off of 350 and a little bit of upside. Then we held 355 3 times and saw a move up to 390. So resistance is 390 and support is 355. Excuse me. In the low of Friday, we hit 356 and the bulls bought that dip a little bit. Big red flag if we break 355, and bulls, if we break 390, they're going to show strength and control. The weekly time frame has me a bit skeptical of the bulls at this point, just because of the big upper wick showing profit taking this week. We are holding exponential support, but the bulls wanted to see a solid bullish reversal candlestick after 3 weeks of consolidation. Technically, this is still a bullish reversal candlestick. It's an inverted hammer, but it's not my cup of tea in terms of bullish reversal candlesticks, because the psychology of what's going on is that the bears are knocking the price back down. Why it is a reversal candlestick sometimes is because it is viewed as the last push by the bears before the bulls take over. But it is an inside candlestick with the range of this week fitting within the range of last week. And it's those two levels I just pointed out, 355 and 390, the range to be watching on EMC. MJN, perfect breakout for the bulls. All-time highs here. Blue sky breakout above $2. And this is one of the first names we're going to see here to break above the high that we saw on the November run. So that shows a lot of strength. And we got that big clear breakout. As soon as we broke $2, that's your buy signal if you're not already in the trade, because of the lack of resistance. And we can see as soon as we broke $2, we made a 10% move that day. So a really nice, clear day trading signal, or a long-term swing entry signal. In terms of Friday, we consolidated. We back-tested the upper Bollinger Band support and held it, and it was on a little bit of decreasing volume. It was still a lot of volume, a little bit more bear volume than the bulls would like to see, but we have an inside candlestick here to be watching on Monday with support of 203 and resistance of 220. I would say it would be a pretty big red flag short term if the bulls broke $2 on the back test. They really want to hold that level that was resistance, and now they want that to act as support. So a close under $2 is a red flag for the short-term MJN bulls, but long-term, bulls are in full control, We just rejected from the weekly upper Bollinger Band resistance of 214, and we're going to have to keep an eye on that resistance level, as it's still going to be a factor next week as well, as it will likely be around the low 220s. So nice continuation for the bulls. Look at that spike. So we had the breakout in November, decreasing volume, consolidation, tighter, 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 increase in bull volume for the initial break, and then consolidation again, low volume, and then another big volume spike. So this is exactly what the bulls want to see, with a big green breakout week followed by decreasing volume consolidation weeks, breakout, consolidation, breakout. That's a good looking weekly chart. Now to some US names, CBIS. So we saw a big time profit taking day on Thursday where we all out dumped. If you were watching that on the 5-minute time frame, the RSI got extremely oversold. We dropped all the way down to the middle Bollinger Band on the daily, and from that point we've seen about a 15+% bounce. So really oversold conditions, giving a potential day trade opportunity, or if you held into Friday, saw a little bit more green to the upside. We have new resistance at 13.65. Highest price we've seen is 13.95, so we got close, and we've bounced off this middle Bollinger Band daily support now twice. That level is 10.9. Keep an eye on that level, because a close below it will be a red flag for the bulls, which have been experiencing a very nice bullish uptrend over the past 2 months. Weekly time frame, we can see the indecision doji rejecting from the upper Bollinger Band resistance, and the bulls want to maintain higher lows, so a break of 10.6 and a loss of that middle Bollinger Band would be those red flags. ENDEV had a dump, and personally, if I were in this trade, I would have a stop loss just below 5.9, because if that breaks, that was the low of consolidation. We saw a bounce attempt and then a lower low as soon as 5.9 broke. So very oversold. Big red flag is the increasing volume on that dump. Bears pouring the shares into the market and seeing that big collapse. But we've held the 100-day moving average support 3 days in a row, and that's at 46 cents currently. Bullish reversal candlestick on Friday here. We need to see follow through and a break of 54 cents to see some continuation. I just anticipate that this is going to be a short-term bounce attempt, in my opinion. I think we're going to see a bounce into the 50s, the mid to upper 50s if the bulls see a nice bounce. But the bears are in control of this trend ever since the end of December, and it's going to require a significant showing by the bulls to turn that trend around. And we can see that on the weekly time frame. We are holding that middle Bollinger Band just barely. If we close below that level, it's a red flag. You can see we've undergone periods of consolidation on the weekly on the way up, but we haven't had a bearish candlestick look anything like this. We had one back in November, but a long lower wick of bulls buying the dip. Not really seeing that bulls buying the dip here. And again, that volume is a big time red flag for the bulls, and we're on the verge of a bearish MACD cross as well. So the bulls, as I said, I anticipate a short-term bounce off of this moving average support, but I would not be surprised to come back and test this 100-day moving average within the next 2 weeks. And obviously, if we break the lowest price we saw of 45 cents, we're going to see another leg to the downside. So we need to be cautious as a bull here. Like I said, I would have been out on a break of 59 cents, but as of now, if you're still in it, need to see increasing bull volume and a move back. The more upside we recover, the better, obviously. And GRNH saw a nice volume spike, but profit taking by the end of the day. We had 10.5 resistance, which has been resistance back in January, the end of January. But it was interesting to see maybe potentially some of that profit taking we saw on CBIS, because again, this is a big time volume. CBIS saw over $10 million, $11 million traded on Thursday. And you look at GRNH, and this big volume day was about $850,000 traded. So it's nowhere near on par in terms of volume that we're seeing on CBIS, but it's interesting to see maybe, hey, Thursday we saw CBIS see some profit taking and some people entering in GRNH looking for the next breakout, but obviously not a strong close. So what I'm watching on GRNH is on the weekly time frame, middle Bollinger Band support, tightening and squeezing between this 200-week resistance. And we've rejected from this 200-week resistance essentially 5 out of the last 6 weeks. So a close over this level will indicate to me that we're headed back to 11.7 and then looking up at 15.9. But if we lose this weekly middle Bollinger Band, which is currently going to be just about at 9 cents next week, close below that level on the weekly, that's a red flag for the bulls, as it has been holding nicely over the past couple of months. So that's what we're looking at on the MJ sector. I know there's a whole bunch more names, SPRWF. We've got AMMJ and a lot of other names that people are watching, but I'm done talking for now, and we'll see what these names do next week. I am keeping a close eye on GRNH to see if that volume shows up and if we can get a close up above 10 cents. Need these Bollinger Bands to expand to the upside, but that weekly time frame is a bit intriguing for me personally. So I appreciate you watching, and I will check back in at some point next week. See you soon.